What is going on, investors? Hopefully you guys are doing well out there. That is right. It's time to celebrate a little bit. We had a big week of corporate earnings, and it is Friday, and that also means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. And this week, we had earnings from Meta, we had Tesla, we had Google, we had Microsoft, and we had fireworks. So better kick things off like we always do with Meta Platforms. Start the week at 488 and some change. And despite reporting very, very impressive numbers, shares of Meta were down over 9% the week to finish at 443 and some change. Now, President Joe Biden, signed a bill forcing a TikTok ban or Chinese divestment. And that's going to draw all kinds of legal challenges, all kinds of maneuvers. I saw another press release saying that TikTok may sell the website and the user list essentially, but keep the algorithms. We'll see what ends up happening here, but we talked about this on a previous video. This should be a tailwind for all social media sites, whether TikTok gets banned or not, because what's going to happen is we're going to have to discuss how much is TikTok worth? And then we're going to come over to Meta and see a company that we'll talk about here in a second growing 27% on the revenue side year over year and has a forward price to earnings in the low 20s. I tell you what, if TikTok goes public, they're going to have a price to earnings probably in the triple digits, and they're not going to pay a dividend. They're not going to have a buyback, so it's going to make stocks like Meta, and maybe even you go down the stack. I know Snapchat had a huge day. Pinterest and others, certainly Google's YouTube as well, probably going to have to get reevaluated. Now, speaking of reevaluated, the company reported their Q1 earnings, and they were fantastic, but we had some interesting things draw down the share price of Meta over the last couple of days. First of all, they decided to increase their spending on their data center by several $billion. That will likely tangibly impact EPS and earnings. So you have these analysts on Wall Street, they have to adjust their models and stuff, and they're making that adjustment over this week and into next week. Also, what was interesting with Meta is their guidance for the upcoming quarter was actually really good. It just wasn't exceeding expectations or exceeding what the expectations were. And so it was more or less meeting those expectations. When you meet expectations on Wall Street and you raise your fixed costs, typically your shares go down, but I think it actually creates a buying opportunity. Now, Meta, we've been critical of Mr. Mark Zuckerberg in the past, and we certainly, if we think he deserves to be criticized in the future, we'll criticize him. But I tell you what, this company's got some really interesting strategy, and they've got a lot of cojones as well. Meta's going to open up their Quest headset operating system to challenge Apple. This is not just like open source it and you have to use the Meta platform. No, they're going to open up the operating system on Quest to other device makers. Meta's been doing this in the AI race as well with their Llama 2, Llama 3 large language models. They basically open that up to anybody and allow them to build on top of it. It's an open source strategy. It's an open strategy. It's one that not every company, Apple, tends to deal with. And I like it for Meta. Now, is it going to pay off? That is very, very difficult to project, but I know I'm going to have fun monitoring this situation. We'll certainly keep you updated on Meta's progress now. Now, speaking of Apple and closed source, shares of Apple start of the week at 165.95. We are on the eve of Apple earnings next week. And the iPhone maker up 2% this week to finish the week at $169.30. Now, the company is making some, quote, put this in air quotes, smaller acquisitions for AI companies. They bought the French AI startup Techical. This company works on ways to compress computer vision neural networks. So a lot of kind of nuts and bolts, if you will, or picks and shovels types of acquisition Apple is making. And we're expecting something from this company in the coming weeks, maybe even months ahead, sometime later this year. As it relates to AI, we'll see what Apple is able to come up with. Now, I thought this was interesting. I don't follow the sport of professional soccer all too closely, so I thought this was interesting that Apple is nearing a deal with FIFA, which is kind of the governing body of like international competition of soccer, obviously the World Cup as well. This is not going to be the World Cup, but it's going to be a World Cup-like tournament, I think in the off years that the World Cup is not going to be played. Allegedly, or apparently, this was supposed to be held in China in 2020. 2021, but now the event is going to be played between June 15th and July 13th in 2025. I think this is just going to be a major event. And then obviously you have the 2026 World Cup, where instead of 32 teams, you're going to get 48 teams, and they're going to play right here in the United States along with Mexico and Canada. Again, I don't watch professional soccer, only the World Cup. I will watch almost every single World Cup game. It's a fascinating sport, and I think what Apple is seeing here, so Apple, I think it was last year or the year before, they signed an exclusive deal with the MLS, which is the professional soccer league here in the United States. I think what they're finding is advertisers might like it, but also the Apple customer just tends to be a fan of soccer. And now if you're locking in FIFA to like a first-time World Cup, I mean, everybody's going to have to tune into this, and I think that'll be great for Apple. Now, iPhone sales, not great. In China, they tumbled 19%. We also had another headline where activations of iPhones here in the United States also down. We'll obviously see this when the company reports. Have the expectations on Apple been low enough? Very similar to Tesla, which we'll talk about here, obviously, towards the end of these segments, is have the expectations come so low with Apple that they're able to surprise to the upside? And can Tim Cook come on a conference call? I don't think he has any Elon Musk in him in terms of big promises and making grand statements. But I tell you what, if Tim Cook starts doing that and the iPhone sales are good enough, well, we might be sitting here next week with Apple shares much, much higher. Now, the company is setting May 7th for a special event, likely rolling out new iPads with OLED displays. Will that be enough? So will that be enough to get you to upgrade to your iPad if you bought one over the last year or two? Probably not if you're in the market for a new iPad. I tell you what, just wait another week or two and they'll have a new model. Now, Apple is going to slice the Vision Pro unit shipments for 2024 and 2025 down from 700 to 800,000 units down to 400,000 or maybe even potentially less. There were a lot of people in the tech community that were very bullish on these things. I have always called them the most expensive pair of ski goggles you possibly could buy, although I don't ski, so maybe ski goggles do cost several $1,000s. I am not sure, but I have never, ever been bullish on it. Is it a cool device? Yes, but for $4,000 or whatever it cost, you got to be kidding me. Now, moving on to Amazon. Start of the week at 178, basically flat. We've got Amazon earnings next week. So if you thought earnings were exciting this week, we still got a lot of excitement next week. Two gigantic companies, Apple and Amazon. A lot of smaller, we'll put that in air quotes, smaller companies will report as well. AMD, other companies, we'll eventually hear from PayPal, many others. It's actually just getting even more exciting as the week goes on. Now, Amazon rolled out a low-cost delivery option for grocery. You're going to be able to pay $9.99 per month on orders over $35 from Whole Foods Market and Amazon Fresh and maybe some other retailers as well. Now, what's interesting is Walmart and Kroger shares maybe potentially reacted to this, but at least out here in California, the Whole Foods customer is nothing like the Walmart customer. And I say that with all due respect. If you're shopping at Walmart, you're probably not shopping at Whole Foods and vice versa. I think all these companies are going to do just fine in the world of grocery. Now, Amazon's Bedrock model maybe taking a little page out of Meta, although Amazon has run by this open source, if you will, playbook for a really long time. They've open source or essentially opened up AWS. They've opened up their marketplace on their website, Amazon.com. Now they're opening up Amazon's Bedrock to allow users for imported customized AI models. So you're going to be able to use both in tandem on the same API. So it's going to allow you to use maybe aspects of Bedrock, maybe bring in your own large language model and create custom things. That's the direction that Amazon is moving. Now, AWS plans to spend $11 billion on data centers just in the great state of Indiana. So you got Caitlin Clark coming to town, and now you got AWS coming in with $11 billion. And we talk about it a lot, that there's all this investment into the data center. In fact, I just posted a video today on my new channel. First of all, thank you for all the support. The support I get on this channel, that channel is amazing. I thought maybe I could get to 1,000 subscribers. We're actually closer to 2,000. And so all your support, very grateful for it. But what we talked about is you've got all this investment coming. We saw it with Meta. We saw it with Google. We see it with Microsoft. Tens of billions of dollars a quarter on the data center. And I talk about how they're down the stack. You've got suppliers to NVIDIA, AMD, Intel, all the chip testing, cabling, all that stuff. But I tell you what, you can even go more basic than that. Just the raw materials, industrials, United Rentals, all these things. When you're building an $11 billion data center, you're probably calling United Rentals every other day. Now, the NBA is in media talks. They realize Disney don't got no money no more, and so they come into Amazon and potentially YouTube as the front runner for the streaming rights to the NBA. That would be a big deal. Obviously, you have YouTube with the NFL, and potentially maybe Amazon, maybe even YouTube scoring the NBA too. That would be big. Now, Amazon's going to bring NHL games to Prime in Canada as the only companies that are going to be able to afford sports streaming rights in the future. And this is great for the athletes. They're going to get even bigger contracts, and the owners, I guess, as well. Bigger contracts than they already do. Wait till that WNBA deal comes up. I mean, the ratings on those games are going to skyrocket, and thankfully, the salaries of those players will go up as well. Now, moving on to Netflix. Start of the week at $5.46. This stock is so resilient, up 2.8%. Obviously, after kind of a bad week, a bad month, you're down about 10% on shares. But a bounce back week where you have Netflix back to $561 per share. Now, this is the segment where we talk about streaming media, not pertaining to the other mega cap stocks. Paramount dropped on a report that Sony hasn't made a bid yet. I guess Sony thinks they can buy Paramount with any kind of regulatory troubles. And I tell you what, if it was just Sony or some other media company or one of these tech companies coming in for Paramount, we talked about Paramount. I mean, this is like a bargain basement stock. It's like AT&T. You've got a near single-digit forward price to earnings on this. You still get a little bit of a dividend. It's got an incredible catalog of media and entertainment. But the problem is you've got this deal with Skydance where they're going to merge with Skydance and then they're going to raise equity on top of that. If it was just like this idea that Paramount could get bought, you could almost say, hey, there's like a call option underneath the shares to where, you can't go much further down than maybe the 52-week low of about $10. In fact, if I bought this one, I would put a stop loss at 10 with the idea that somebody's going to bid $15, $18, $19 on this one, and boom, I make a quick $7-8 a share. But it gets complicated when you've got other private equity in there, another deal that maybe gets closer. So unfortunately, I'd probably avoid that one. Moving on to NVIDIA, start of the week at $782. And after the big tech companies were like, yeah, we're spending all kinds of money on AI servers, everybody knows where that money's flowing. And it is going to flow to NVIDIA. Shares of NVIDIA up 12%, back up to near all-time highs, 974 all-time highs, but we're back up near $800. I tell you what, any sign of weakness in that company, and it's been proven that you should get in there and buy. Now, China's reportedly bought some of NVIDIA's high-end AI chips that are currently subject to export controls. President Joe Biden's been very, very strict on the country of China getting their hands on these popular NVIDIA chips. Some people might say that's good. Some people might say it's bad. I don't really have an opinion on it. I just think it reduces NVIDIA's revenue a little bit, but the country of China is getting their hands on it as these chips are bought by companies like Supermicro, Dell, and others that basically kind of put together these servers, if you will. And then China is able to basically buy the server from secondary sources that already has the export control chips in it. I tell you what, I think this is a shorter term solution to something that maybe needs a longer term solution. If you want export controls, if you're the administration in now or even the next administration, whoever it might be, and you want these export controls, you're going to have to do more, because the next chips from NVIDIA, instead of needing 1,500, you might only need a couple hundred of them. And to get a couple hundred of them is a heck of a lot easier than getting thousands of these things. And you can get that by the United States government. And you can also get them embedded in these servers that are being pre-built by Supermicro, Dell, and others. I tell you what, probably bullish for NVIDIA, no matter where you slice it. Now, NVIDIA is confirming a deal that they acquired Israeli startup AI. This was a deal for about $700 million, which, look, 2 years ago, this would have been a big deal for NVIDIA. Now they're worth $2 trillion, and $700 million is kind of a rounding error. Now, NVIDIA is set to be featured on 60 Minutes. Now, some of you guys that are under the age of maybe 30, 35, you're going to be like, who cares? A boomer show like 60 Minutes. 60 Minutes still has some cultural relevancy here in the United States. We have seen stocks move on either positive and more often than not negative reports on 60 Minutes. I don't think 60 Minutes is going to cover NVIDIA necessarily in a negative light. They might touch on some of this China stuff, but all in all, I think NVIDIA will be covered positively, and it probably won't be too big of a deal. Now, Intel stumbled, guys. Intel stumbled again on weak guidance, AI foundry issues, and they continue to weigh. I've said it time and time again. Intel is a fake AI company. In fact, my employer had me come out with a special report. Now, a little spoiler alert, we're giving away a little free content here, but they asked me to come up with some companies. I think it was 5 companies that I thought were fake AI companies. And before they could ask me what I thought was a fake AI company, I said, Intel. Intel is a fake AI company. Now, they're going to make computer chips. They're going to make some stuff that goes into the data center, but it's not an AI company, and it's not benefiting, and that's why shares are down 9% after reporting earnings and a guidance that was a disaster. Moving on to, Google. Start of the week at 155, and hold on, I've got a text that I've got to check here. It's from Sundar Pichai. He says, "You idiot investor channel dude for saying I should be fired, and I'm a clown. F you. I'm up 10% this week after reporting earnings, and not only reporting earnings, but declaring a 20-cent dividend and announcing an additional $70 billion buyback. It just goes without saying. Shares of Google went up 10%, and it was for good reason. They were absolutely spectacular results. You've got a forward PE in the low 20s on this one, and it was spectacular. They cut their marketing spend. They grew their revenues. They grew their profits. YouTube's firing on all cylinders. Google Cloud looks like it's firing on all cylinders. Forget the fact that they've botched the AI rolled out. Forget the fact that they've got a bunch of woke employees that can't train Gemini to properly identify the founding fathers or people who fought in World War II. Forget all that, because I tell you what, the stock performed financially. Now, Google's AI search rival, they got rivals out there in the search engine. I guess it's not just Yahoo these days. Perplexity plans to raise at least $250 million. And look, despite all of Google's flaws, it's like the rich getting richer. This company has the money to fend off rivals and potential competition. Not that Perplexity is not a great product, but I think it's going to take a lot more than $250 million to take down this giant. Now, Google's delaying the phase out of third-party cookies on Chrome again. They've done this like a million different times. Essentially, they store cookies on your browser to get your browser history, to gain kind of a profile, if you will, to serve you targeted ads. They've said for a long time that they're going to phase these out. They haven't figured out a way to do it, and that's just where we are. Now, the NBA is in media talks. We talked about this with Amazon, but also YouTube in the mix. It'd be really interesting. Google certainly has the money for it. Amazon has the money for it, but to a lesser degree. Google, like we said, has like $100 billion in cash and not a lot to do with it. Now, moving on to Microsoft, started the week at 402, an up and down week for Microsoft, but basically finished up 1% to finish the week at 406, and that includes an up day after its earnings, which were more or less in line. Revenue came in at $62 billion. You had guidance as well on the conference call, more or less in line with where you were coming in. Chances are Microsoft's sandbagging a little bit. They'll probably come in at a beat close to $1 billion in the next quarter. They gave a lot of really good anecdotal evidence that Copilot is being adopted, but we didn't really see it exponentially show up in revenues. And so I think that's the only question mark with Microsoft. We know Copilot is a great product. We know customers are paying for it. We know that they're seeing results. But when will it show up on the financials, very similar to how Google's financials and even Meta's financials were? When will we see it there? I think that's the question. We see the capital expenditures. We see the investment. We see how cool AI is. But when will we go from 17% growth to like 30% growth because of AI? I think that's the question. And there's always a question if that ever shows up. Now, Microsoft unveils a smaller AI model called, I think that's Phi 3 Mini, and basically this allows users to run the model on a device without the need for an internet connection and or access to the cloud. So this is the future of large language models, having them embedded on your phone or maybe even a smaller device with less memory, less battery that will take, I constantly talk about how you have hardware, software everywhere with AI, just like the internet, just like cloud computing, just like a lot of different technologically advancements. But large language models, the minute you don't need internet connection, you don't need cloud access, and you don't need a $20 subscription to ChatGPT, that's a big moment for AI. Now, speaking of big, moving on to Tesla. Start of the week at 141. The company reported their earnings, I believe, on Tuesday, and it went bombastic, up 19% to finish the week at 168 and some change. Elon Musk put on his Frank Sinatra top hat and just sang love songs to analysts, and they ate up every ounce of what Elon Musk was selling. Revenue was down year over year, 8.5%. The guidance didn't seem so good. Nothing seemed good for Tesla, but they pointed to an upcoming affordable model, which we haven't seen a prototype of. We don't know how much or how, quote, affordable it is. You can go to Tesla's website, and with the tax credits that you can get here in the United States, you can buy one of these cars for what I actually think is a pretty affordable price. You can also lease these things for $299 per month. I don't know what a payment on a Honda is or a cheap Toyota is, but it's probably not much less than $299. So everybody's pointing to Tesla. Oh, they're going to come out with a $25,000 car, and that's going to change things. I don't know. They already have cars that cost almost $25,000. You can get a Model 3, brand new almost, for not much more than $25,000. And if you want to buy a used one, we've got Hertz just donking them off for basically nothing, as that company has been sunk by Tesla because they realize nobody wants to rent the Tesla on a road trip if they've never had one before. And on top of that, you have really declining EV demand. So I don't know. I hear the Tesla bulls, and I love Tesla. I love Elon Musk. I own 2 Teslas. I will buy a Cybertruck the minute they allow me to come down to Austin, Texas or Fremont, California to buy one. But I'm not convinced a lower price model is going to do anything for this company. And also, don't get me started on autonomous. I posted this on our channel that the robo-taxi is going to turn this into Boeing. Any mistake is going to be amplified. And on top of that, Elon Musk, for better or for worse, is a target. Now Tesla is a target by the liberal news media. Any mistake by these robo-taxis, which are not perfect. I've driven plenty on full self-driving, the newest 12.4 version or whatever it is. I drove all the way to Las Vegas and back, and I would have not been comfortable sitting in the backseat of that car on robo-taxi mode. I just don't think this autonomous upside is going to show up anytime soon. And I don't think affordable models are going to help anytime soon. But still, we've got a $542 billion valuation on a company with plenty of cash and likely enough operating profit to survive the downturn. But I'm not believing what Elon Musk is saying. And maybe, probably, he'll prove me wrong. Now, moving over to the S&P 500 technical segment, did get a little bit of a bounce this week, but I tell you what, a bounce means absolutely nothing if this is the start of a downtrend. I'm still not convinced this is the pattern that we're going to be in over the next couple of weeks, maybe even couple of months, where we made a high, lower high, back down to the middle of the channel. Your time to move on the S&P 500, anywhere south of 500. I know that's only 99 points away. You probably shouldn't be greedy, but that's where I'm targeting with the S&P 500. Now, Meta tried to close the gap after earnings. We've had this massive gap up. We'll see this with Google. We'll talk about this kind of in a similar context when we get to Google. Massive gap up, and then we ran after earnings. In fact, we gapped to 450 and we almost rose to 550. Topped out at 530 and then boom, reversed all the way back down here to 440. Overhead resistance will be at the gap at 550. I think we get rejected here. I think you have opportunities probably over the next couple of weeks, next couple of months to buy Meta in a trading range. The top of the range should be 450. Bottom of the range should be in the $400 range. Where you buy, how you acquire is up to you. I think the company's financials are strong enough that if you want to step in here, you can accumulate. A stop loss should be somewhere under 380 on this one. Don't think you'd want to see shares move back down into that range because it brings in a lot of probabilities of lower prices. Now, moving over to Apple, we did find support at a very logical support area multiple times this stock has kind of rebounded and even in the past peaked out at this $165, call it $170 range on the shares. But unfortunately, in the shorter term, we still have not broken out of this channel. Lower highs, lower lows. We didn't do anything but confirm that this week. You get a move lower in Apple shares after earnings. Again, the earnings are just 6 days from now on Apple. We'll certainly bring them to you here on the channel. Anything lower, especially south of 160 on this one, I think is a buying opportunity. For Amazon, we made a very brief stint below the middle of the channel. So we have these channels. Let me take these like horizontal lines off here so you guys can see this a little bit more clearly. Here's our upper channel. I like to dissect channels in the middle. And when you approach that middle area, that is your time to go. Not all in, but that is your time to go. And it proved out with Amazon as the stock hugged there for a day and then moved higher. Amazon reports their earnings in 4 days. And I tell you what, if Amazon has similar operating results where they produced record cash flow for operation, record revenue and profit from its e-commerce business, if they do that again, all-time highs are coming for Amazon next week. Now, moving over to Netflix, back testing to the top of a channel. That's why we leave the previous channel lines intact, because oftentimes what happens is this is like a blow off top right here. We're maybe a little over enthusiastic about Netflix. Come back and back test it. Now the question is, do we suck back into the channel? You suck back into the channel. That's when you reach your wallet and you're ready to buy, because this upper trend is still intact. You buy the dip. I can't say this enough. You buy the dip in an upward trend. When we get to Tesla, it's a little bit different. But with the S&P 500, long uptrend, we're buying the dip. Meta, long uptrend, we're buying the dip. Apple, a little bit in between. There's a little indecision there. Amazon, huge uptrend. The most well-defined uptrend out of all these stocks, we're buying the dip. Same thing with Netflix. Huge uptrend that dates back all the way to June of 2022. You bet you, I'm buying the dip on that one. Now, speaking of buying the dip, this thing goes down. This is NVIDIA, goes down like 18 cents, and you probably should buy the dip. Now, more interesting though, technical pattern is not actually super sexy. Still making lower highs, confirmed a lower low this week. You don't get earnings for this one for a long time, the 26. Fake AI companies like Intel don't really give you any indication of this. We did get data center spend, not only in the most recent quarter, but confirmation from Microsoft, Meta, and Google that the spend is going to not only accelerate, but continue well into next year. NVIDIA is going to report strong earnings. The question is it priced in already on the shares? That's a difficult question, honestly, to ask. Now, Google is starting to look Meta-like because we set up at the top of the channel and then blasted off to a new high, gapping in the chart. Now, as you recall with Meta, we did the same thing. We set up at the highs. This was back in the fourth quarter. Set up at the highs, gapped, and then ran. We went from 450 up to 520. I think Google has a solid chance at doing that we've created a gap here, but there's nobody that's going to be wanting to sell this stock, and then we have a gap and a run. So if you want to play short-term money, here's your opportunity. You buy the shares where they're at, you put a stop loss just underneath the gap, because you're either going to shoot and run on Google, or you're going to kind of gap and crap, as they like to call it, come back here and back test. If you back test to 160, that's your next buying opportunity. You're doing one of those two things with Google. Now, Microsoft's still on a very steep uptrend since December of 2022. You could even put kind of the top of the channel right here. More recently, we've more or less kind of sideways consolidated inside of this channel between, we'll call it 400 up to 430. We're basically in the middle of this channel. I don't mind if you buy Microsoft at these elevated valuations, because the company just continues to deliver. Now, the one company, Apple's in a little different spot, not quite Tesla-like, but Tesla's in an ugly spot. It's basically gone sideways. It's almost like Intel. I mean, it's not as bad as Intel, but you basically could have bought shares basically 4 years ago on Tesla for the same price. Now, they've gone up over nearly $420 per share, but they've also gone down to about 100. So unless you've traded this one, chances are you're either underwater or you've barely made any money with Tesla. We're still making lower highs, lower lows. That was basically confirmed this week. You need Tesla continue to walk its way to the top of the channel. Even if we move all the way to $209 per share, what would we expect? Yeah, you guessed it. The trend to continue and come down here and make potentially a lower low. Until you break out of this channel, You have to assume it's going to continue. And even though Elon Musk did a fantastic job, and I know I said I doubt Elon Musk, I still give him so much credit for doing that, because you won't see Tim Cook do it. You won't see Andy Jassy do it. You won't see Sundar Pichai do it. Elon Musk puts his nutsack on the line every conference call. He's constantly over-promising and under-delivering. But in some ways, I actually respect that quite a bit. Hopefully you guys enjoyed today's video. Back next week, we got Amazon, Apple, and I'll try to do as many other earnings videos as we possibly can. I'm going to rest my voice for a day or two and get back at it. Until then, have a great weekend. Be safe. Good luck with your investments.